Don't let unexpected mortgage rate changes catch you off guard. By the end of this short video, you'll know not only how to predict where the market is heading before the market changes, how to submit an application quickly and effectively, and how to change your product once your application has been submitted. So most consumers think that the Bank of England base rate dictates where mortgage rates are heading in the future. Now, mortgage rates are coming down, granted, and the Bank of England is due to slash the rate again in November. Now, what's interesting is that swap rates is something that people don't really know about. Now, swap rates are rates that lenders lend to each other. It's the rate of interest charged on a loan from one bank to another. Now, that actually dictates where mortgage rates are heading. So if swap rates are increasing, it's a very clear indication that mortgage rates will be increasing as well, regardless of any movements of the Bank of England. So one way to get ahead of the curve to understand exactly where the market is heading if you are looking to submit an application is to access the Financial Times. I think that's the best resource that I've come across so far. It's free. All you need to do, type in Financial Times swap rates into Google, and you'll come up with a page which will indicate exactly where swap rates are heading. Now, if the chart is indicating rates moving upwards, it's a very clear indication that mortgage rates, so consumer mortgage rates, will be increasing as time progresses. Now, what's interesting about the Bank of England is that the Bank of England does dictate the cost of debt moving forwards. So that impacts obviously savers and it impacts obviously mortgage holders. But it's swap rates which actually dictate which direction those movements will be heading in the short term. So if you are in a position to be moving forwards with a mortgage application at some point now or in the future, it's probably a really good idea for you to just keep an eye on things. If you're looking to submit and you have an offer accepted on a property, or you're looking to refinance and you can see the chart moving upwards, probably a good idea to submit an application sooner rather than later. If you're new to my channel, hi, I'm Jonathan. I help property investors secure limited company mortgage products, and I would love to get on a Zoom call and have a conversation with you regarding any problems that you're experiencing as a property investor. It will help me massively to create better content for you, and of course you'll be able to speak to me on a one-to-one basis to see if I can help in any certain way, shape or form. Now, it's a free Zoom call. I'm putting the link in the description below, so please feel free to touch base with me. I'd love to speak with you. So how do you secure a mortgage fast? So there's a couple of things that you can do. And the first thing is you need to have really good personal admin. In other words, there's a range of documentation that we need as mortgage brokers to submit an application as quickly as we can. And those documents include income verification documents. If you're self-employed, have your tax computation documents, tax year overviews, limited company accounts all lined up. If you don't have them, request them immediately from your accountant. Other documents, such like bank statements, you can pull off quite easily. But things like proof of address documents, that can be quite problematic, especially depending on the broker that you're working with. So if you are working with the broker and you're at arm's length, in other words, you haven't seen or met that broker face to face, then typically that broker could ask for a paper copy of an address verification document, something like a council tax, bank statement, credit card statement, utility bill, BT, Virgin, Sky. The problem with that, of course, is like you and I, we are not requesting paper statements at this moment in time, right? So it's all about saving the planet and doing our piece, which is great. But when it comes to mortgage applications, a lot of these lenders are asking for postal documents to verify that you're actually living at the address that you state that you're living at. So one pro tip is, if you are looking to move forwards with an application in the coming days or weeks, request paper copies from at least 2 providers. Something like a bank statement, a council tax statement, any document from HMRC, utility bill, something along those lines that will save you a massive amount of time and ensure that your broker can submit your application as quickly as they can. Now, other things to take into account in regards to the speed of an application. So one thing that you can do is you can work with your existing broker. Now, when we are onboarding a client at SPV Mortgages, that is probably the most painful experience that a client will have to go through, because we simply don't know them, and due to our regulatory requirements, we are obliged to hold certain information in order to transact a mortgage application. There are certain expectations that we need to adhere to. Now, once we've transacted that first application, things get like 90% easier. It's so much easier to transact a mortgage application fast for an existing client rather than a new client. So if you are in a rush, my advice would be to perhaps stick with the same broker that you're using. They've already got a record of your information. They're probably not going to need huge amounts of information in order to get the application submitted quickly for you. Even after submitting an application, you do have the opportunity to switch rates. So let's just say that on Monday you were quoted 3.99. It's taking you until Friday to submit all the documentation and information to your broker so that they're in a position to move forward with submitting your application. On Friday, rates have edged up to 4.19%, which obviously you're not going to be happy with, and neither is your broker. What you can do is submit the application on 4.19% and just see where rates head. Now, even during the process, you will have the opportunity to switch to a lower rate. Not you, but your broker will action it on your behalf. Once the offer has been issued, and let's just say for argument's sake that's on 4.19 instead of 3.99%, up until exchange of contracts, if you're looking to purchase, you'll have the opportunity to switch to a lower product with the same lender. If you're looking to remortgage, then you can probably switch the rate about a week before the solicitor's ready to pull the trigger. So that will probably be a week before the end date on your current product. That will avoid you rolling onto the standard variable rate, which obviously we want to avoid. Now, when it comes to brokers and keeping on top of things, brokers in 2024 are busy. In 2023, not so much, but the market has completely changed. So one thing that you can do in the background, even whilst the application is in process, is to look at swap rates and keep an eye on inflation and the Bank of England base rate, because all of those will impact future mortgage rate directions. So if you find, or if you discover that certain metrics have changed, you can obviously contact your broker, keep in touch with them, and ask them to just double check on a regular basis what the products are with the existing lender that you've applied to, and if there is a better one for you. If you're interested in learning more about mortgage interest rates and how that will impact landlords' ability to expand their portfolios or refinance, then please watch this video. It's all about that.